All right, everybody, what's up? Good afternoon. Michael Edward here, the head trader at True Trading Group. And I'm on fire this week, guys. I have been nailing the SPY. Um, I've been trading the SPY very, very well, just identifying opportunity, trading off of levels. I haven't been hitting like home runs, but I'm just taking what the market gives me. On Monday, had a 116% gain on SPY options, then a 47 or 43% gain, whatever it was on Tuesday, 47% yesterday, now 50% today. Um, and I've been focusing on the SPY during while this market just continued to bounce. Um, and another really solid trade today. I only made one trade today, and it was just the SPY options. I'm still holding a piece of my SPY options, looking for a little bit of a pullback next week. I'll show you guys why I have put options, why I bought put options today in the first place, because there's a lot to do with a kind of a bigger picture setup on the daily chart that I just have to be careful of fighting the Federal Reserve, because the Federal Reserve is just doing unprecedented, historic easing. The actions that the Fed is taking, the Fed just announced another $2.3 trillion of stimulus today in different lending programs and everything, in credit markets and in the junk market, which essentially stabilizes the stock market. I think basically I have been saying for a while now that I was always in the camp that the March low gets tested. I was in the camp that this March low gets tested. But what the Federal Reserve did today, I think puts a bid underneath this market. I don't think we get back down and test this low now. Do I think we're just going to rip back and we're going to have a complete V bottom? No, I don't. But do I think that the bottom is in? I'm kind of starting to feel like yes, it is, because I think what the Fed did today established that bottom. The Fed injecting 2.3 or committing to 2.3 trillion dollars of stimulus in the credit markets and in the junk markets, because essentially the equity markets are affected by the credit markets are affected by junk debt, and the um, junk meaning high risk. So the Fed coming in and basically supporting that and supporting credit markets basically puts a bid underneath equities. And if we really have peaked in the spread of cases, we got another decline in hospitalizations in New York. If that means that the worst of the spread is behind us, you can start to see the economy open back up in May, um, and we could have the worst behind us, and then it'll become a matter of how long does it take for the economy to get back going will determine how quickly or how slowly the market actually will continue its recovery. I do think we pull back in from here. I don't think, like I said, we just continue higher, but I think what the Fed Reserve did today with their quantitative easing infinity, and it just continues, and they still said that they will do more. I think that puts the bottom in on this market, guys. I do. Um, Up until this point, I've been in the camp that I think those March lows get tested, but what the Fed is doing is unheard of. What the Federal Reserve has done during this coronavirus pandemic makes what took place in 2008 look like lunch money. The amount of money that is being injected as far as stimulus is concerned makes 2008 look like lunch money. Like if if what the Fed is doing right now, and with the Treasury and Congress, what everyone is doing right now as far as stimulus, if that's a steak dinner, then 2008 was a candy bar. Um, the dollar amounts that you're seeing right now far, far, far exceed 2008. Um, what does this mean for the future? Um, will this stimulus come back to bite us in the ass? Will this bill come due? Will the chickens or roosters, the chickens come home to roost down the road? That's another topic for another video where we can get into a much more in-depth economic discussion, which I will gladly share with you guys. Um, Try not to even bother commenting about that, because the explanation for me to explain economically what this stimulus could do, and how what problems could arise and how those problems could be avoided is a much, much, much longer discussion than just a quick comment on the YouTube video. But I will gladly make a video over the next, couple weeks going over what the economic impact of all this stimulus and QE could be, and what it could mean for us down the road, how inflation could come into play, and what I think could prevent that. Because although this stimulus helps what's going on now and was needed, it was necessary. Otherwise, we faced a possible depression. The economy's never been shut off like this before. Recessions in the past, the economy just kind of slowed down. It's like going 100 miles an hour and you just start to hit the brake as you approach a red light. That's what has happened in history, throughout history up to this point. We've never had going 100 miles an hour in the economy and we just hit a brick wall. That's what happened with the coronavirus. So there's really no model for this. A lot of this is a historic first. Um, so there's a lot of theories, but I'll cover that with you guys at a later time. For this video, the sake of this, let's talk about the SPY trade. And I've been trading really well. Okay, I've had a really good week. It was my birthday earlier yesterday. I've been having a really good week. My birthday week. Markets are closed tomorrow. We have an extra day, an extra holiday. Enjoy the weekend. Enjoy the extra day. Spend the time, guys. Do some studying. If you're a member of TTG, go over all the courses. If you're not a member of TTG, don't forget, click on the link in the description below to get a 30% discount. That is available for as long as the coronavirus pandemic is going on. I'm giving away a 30% discount for an all-inclusive membership to TTG. So click on that link below if you guys are interested. Let's get into the trade recap. And in order to do so, we have to set the basis for the trade. Today, I came into the day. We had a gap up. I'm thinking bearish on the day. Why am I thinking bearish on the day? Because we are looking at a 50% retracement from that bounce. So here's the panic sell-off from the coronavirus. This was the coronavirus sell-off. We bounced back because of quantitative easing and government stimulus, and that took us right to where? The 50 Fibonacci retracement level, right there. Bang, we hit it. The other thing that I want to point out to you guys is this 282 area. Okay, as we look back to the left, look at all of this previous support that we had back here in 2019 from this was August. Okay, then you had more support right there in October. Then you had, although it didn't quite make it down there, you had a support level right there, which sits more around 285. So I'm coming into the day today thinking, okay, we're getting a gap up. I think this bounce is very overdone, although it's stimulus related and you want to try to not fight the Fed. I was thinking we were getting up to a really key technical area of resistance. And I thought if we push off the bell, I thought the best trade idea, risk reward wise, at that point, if we pushed off the bell, was to start to buy put options in front of that the low 280s, like 281, 282. Let's get some puts in front of that area and look for a little bit of a pullback. And that was my game plan today, and that's exactly what I did. Hey, let me go back and let me delete um, some of that stuff. Let me put this right on that August low. Okay, there we are. Let me delete this, clean the chart up. Let's go to the intraday. So here we are. We come into the intraday. Okay. Now, here's that backstop. Here's that 282 level, right? And it's really, it's not 282 exactly. We go back to the daily chart. Okay, you see it's this area. It's the low 280s. All right. So we push right off the bell. Okay, we had the gap up. We pushed right off the bell. And then we got this big turnover. We just kind of turned this over here while Fed Chairman Powell was actually speaking. He was giving a live interview right at this time. We had that quick little pullback and then this real soft bounce off VWAP. I read this as kind of a lower low, a lower pivot low, and also a lower high. And I said that I think that this could be a good area for me to get those puts, keeping the big picture in mind, keeping this resistance level, that 50% Fibonacci retracement, keeping that in mind. I said, this is a good spot. Let me go. I'm going to grab some puts right here, and I'll take you guys to my trade announcements. You guys can see here. I'll zoom in. Okay, right here towards the bottom, you see I bought the SPY 275 strike Monday expiration put at 268. Okay, my stop loss if we break through highs. Now, notice here very quickly, I identify my profit targets. My profit targets are low of the day. My second profit is this is yesterday's highs. Okay, this like 275, 276 area. Those are my first two profit targets, and I planned on holding the rest over the weekend to see if we get a little bit more of a deeper pullback on Monday. Well, shortly after my entry, maybe 15, 20 minutes later, we roll over and we test the low of the day. There's your low of the day. We test it. So my profit target is reached. 25% of the position comes off the table. Back to my announcements. You can see here, I took some profit off at $3.30. So I'm long at 268. 25% came off at 330. Now, this is where this trade got difficult. As you can see, we bounced off this level. This is when we had news out about oil. Okay, this is when we had news coming across the headlines that the Saudis and Russia came to an agreement with regards to oil. We had that quick little bounce. Then the markets were unsure because there was the details of the deal were not really released, and the markets just kind of drifted. Okay, we got rid of that volatility and we just kind of started to drift. We come back down, put in a triple bottom. At this point, I'm saying, damn, maybe we don't roll right now. I'm going to have to hold this till later in the day because the morning breakdown didn't happen. I still think we could roll over in the afternoon, but that's going to eat away at some of the time value on my contract, being that I'm going to have to wait now several hours to actually get this trade to trigger. But I didn't expect us to get all the way back towards the high of the day. But nonetheless, we did. There was the high of the day. You can see right here, we got up here and we actually printed new highs. At this point, the trade got difficult with, do I want to cut this loose? Do I want to hold? Do I want to cut it loose? Do I want to hold? The key here is the tier trading strategy. Tier trading strategy, guys, is what I learned working at the hedge fund to get in and out of large positions in pieces because you can't do it all at once. I've tweaked it, implemented it into my own personal trading. That's how I trade. I trade in tiers. So when I'm taking profits, I identify 3 profit targets and I take 25%, 50%, 25%. Taking that first 25% off the table makes it a lot easier for you to hold the rest of your position if the trade starts to consolidate or pulls back against you or whatever. So by taking this piece off the table, it makes it very easy for me to hold through this bounce. And when we get up here, I'm saying, man, it's lunchtime. It's 1 o'clock. Volume is extremely light today compared to the previous couple weeks. Volume is very light. It's lunchtime. Do I think we're going to rally here? I don't think so. I've got this 281, 282 resistance level that's right above me at this point because we're right at 281 here. So I'm saying, do I think there's a greater chance that we rip to 285 or that we pull back to 275? And at that point, I thought there was a much greater chance in the afternoon we pull back to 275, then we rip to 285. I didn't think we're just going to push right through that resistance level in the 280s. So I stuck with it. Again, holding on to this position has a lot to do with the macro picture. Okay. And understanding that resistance was right above me. And surely enough, we pulled in the afternoon. And right here, you can see we reached my second profit target. And right there, 50% of my position comes off the table. You guys can see here at 2:56 p.m. Took more profit off at $4.01. That is a 50% gain from my 268 entry on the bulk of my position. So again, here's the entry. Here's the first take profit. Here's the second take profit. Trading slightly higher after the bell. And we'll have to see what happens on Monday. I still have 25% of this position. Okay, looking for a pullback on Monday. We'll see if we get it. But was able to close out 50% gain on the bulk of my position and another strong performance. If you guys have been following my channel, Monday, 116% on SPY options, and then it was like 43%, I believe was Tuesday, 47% yesterday, or the other way around, 43 or 47 the other way around, and then today 50. I still have a piece of the position, so we'll have to see what happens on Monday, but that'll go into my Monday P&L. I've already closed out and realized profit on 75% of this position today, and just continues my winning streak trading SPY options. I've been trading them just very well, sticking to levels. And the tier trading strategy has a lot to do with that. If you guys want to learn about the tier trading strategy, I highly suggest taking advantage of the 30% discount now, because after the coronavirus situation is over, we're going back to the full regular price. It's just the stimulus, kind of my way of giving back, offering a 30% discount while all this chaos is going on and people are affected financially, but also obviously health wise and physically affected by it. But so I do wish that all of my viewers that are out there, hope you are all safe and healthy. I hope all of your friends and family are safe and healthy as well. And I hope you enjoy the long weekend. For those of you celebrating Passover or Easter, happy holidays. And take the extra time over the weekend to do some studying, go through the courses, refresh, and we'll see what happens on Monday. All right. Take care, guys. Have a good weekend.